Hello everyone, and welcome to FX Addicts Weekly Market Analysis. This is Tim, the Currency Professor, and today is February 1st, 2013. Well, wild week again today, or this week rather. We made some great moves, and right here in the euro against the US dollar, we can see how much the euro is now up. We are up almost to 137. We did kind of touch upon it earlier, since backed off. But up just about every day this week, and really extending this pattern quite a bit now. We are really due for some sort of a correction here to get us back down to this trend line, which would be somewhere around 131.50. If we could pull back to that, that would be healthy. And if we look on the weeklies, we can see how extended we really are. Very much like this back here, where we ran up 2 very strong weeks and then consolidated for several weeks down. We need something like that now to help this market out, because it is very much overextended. Of course, that doesn't mean it can't not keep going, which very good possibility it will. Technically speaking, if we look on the monthlies here, we can see how we can rally really all the way up to this upper channel line here, which is about 144 right now. Very unlikely we're going to get there this month. You never know, but it would take an awful lot to get there. Now we do have a lot of momentum here. There is a lot of money flowing into Europe, and all because everyone feels that Europe has stabilized economically, stabilized their debt, and so there's a much higher confidence level, comfort level with putting money there. They are still in a recession, and they still have the debt issues. So nothing has been worked out, nothing's changed, it's just stabilized. And so for that, we have money flowing there more than coming into the U.S. Now, this last week we had U.S. GDP reported, which came in negative for the fourth quarter, so that has helped the euro also, in that we are once again pushing money away from the U.S. and putting it into Europe, or so the thought goes. The new round of dollar bashing, as it's been commonly called. The pound against the dollar getting whacked today, down 143 pips, pretty much erasing the last 3 days' gains, and ending the week here not much higher than really we started out. As a matter of fact, it looks a little bit lower here. Let me take a look here. Yes, we are lower on the week. Not by much, but lower. A lot of volatility for the week, and just continues on lower. Now here, we've talked about this many times, is this support line down here, which is down around 156, 155.50 area. That is the area we're heading. That is the area we're going to breach. This will be the 4th time down there. We look on the monthly so we can see it a little bit better here. This will be the 4th time that we're down there. More than likely we are going to breach that level. This whole pattern here, where we have this kind of ascending triangle a little bit after all this damage, very unlikely we would bounce up above that 167 and go higher from this type of pattern. It just doesn't happen. So technically speaking, we are headed lower. Just a matter of time until we break below that trend line and close below that trend line, that support line. And once we do, if we can close down around 154, 154.50 on a monthly basis, then the next stopping point will be down here in the low 130s, and ultimately a goal of about 125. Now, in the U.S. dollar Swiss franc, we have been down all week. We've been down now 7 days in a row, 7 sessions in a row, and 9 out of the last 10 have been down. So we are extremely oversold here. We are experiencing some real pressure in the Swiss franc, going much higher, and that's pretty much across the board. So it's not just against the dollar. And there is a lot of clamoring there within the Swiss finance ministry that something needs to be done. So the pressure is on again, once again, to do something with the strength of the Swiss franc. It is hurting their economy, and it is certainly an issue that needs to be dealt with. Now, technically on the weeklies, we were above this this minor trend line for 2 weeks, and now we're well below, and we're closing at the lows here this week that we have not seen since back here in April of last year, May of last year. So this is not a good sign, but again, we do know that many times that the SMB or the government of Switzerland has a tendency to step in there and support it. The monthlies, we were hoping that this month, or last month, January, would have been the start of a very much larger turnaround here and move up. And as it turns out, it was not. We ended up down the month. We were up most of the month, and then by the end of the month, we ended up negative slightly. And now today, for the month of February, we're even extending those losses. So this is now, we've been down 6 months in a row. This month, February, is going to be the 7th, albeit it's not very much, but it is enough. And at some point here, we are going to turn around, and the spike low is going to hold in here as those lows, and we're going to move higher. But for right now, it still looks fairly bearish as we have turned the corner here on our monthlies. U.S. dollar against Japanese yen. Wow, what a market! Just keeps going. That yen just keeps getting pounded into the ground, and anything against the yen is being benefited greatly by that. So here we are. We had some pretty decent consolidation back in here, and now it's off to the races again. This last week we took a short pause at the beginning of the week, and then for the last 3 days now, just rocketing up. And today it looks like we're going to close on our highs for the week, and just extending. Really does not look like it's going to stop. Again, we should get up here into this 94, 95, 96 level, and then have some sort of a correction. Now, again, the correction, we really can't tell how much of one we'll get. If we could get back down to 89, that would be healthy. Very unlikely that's going to happen. There's a lot of power here behind this market. And on the monthlies, wow, looks great. Really looks great. What a breakout. And then the last 4 months now up, and we keep extending each month more and more. Very, very explosive market. Ultimately, really looking for this thing to get up to around the 125 level. And you'll probably do it a lot sooner than we all anticipate. I was really anticipating it taking a couple of years to get there, but a lot of that kind of anticipation goes out the window sometimes, and we could get there a lot sooner, certainly. Euro Swiss rebounding today, having kind of a turnaround day. We were down substantially earlier, all the way down to about 123 even, and since then we have turned around, and we are up now quite a bit, up about 31 pips, pushing almost 124. So looking good here for a turnaround day. We're going to close there. You can see here in the stochastics how that divergence is. So we're ready to rocket back up here. And looks like this time we may go up more than just a couple of days. We may actually go up here and make some new highs. So looks good longer term, shorter term. Still like this market. Still like it to go to about the 130, 132 level. That is, if we look up here on the weeklies and the monthlies, we can see how we can get up into that, above that 130 level very, very easily. It wouldn't take us very much to get up there. So another great play here, another great market. And we know that eventually the Swiss National Bank or the government of Switzerland is going to pressure enough that something else will be done here, and the Swiss will be knocked down in value, and everything else will go up. So that'll be the opportunity here where it'll rocket up into those 130s. Euro yen, same thing as the dollar yen, just rocketing up quite a bit, up 212 pips today, well up above 126. Looking like it's probably going to just keep going. We had targets here of around 123, 124. We blew right through that this week, and it just keeps going. We look here on the weeklies, it is just almost straight up, which is kind of dangerous. Now this 127 level from back here, we should probably hit some resistance up in there, albeit not very much, but enough maybe to pull us back for a couple of days. Get us off of the top of the stochastics here a little bit, but ultimately it looks like we're running up here to this 137, 140 level, and boy, we could probably do that this month the way it looks. Very, very much, very strong, just blowing up, as they can say in the market. It's a real blowout. So very strong, great patterns. Dangerous though, very dangerous markets because of the extension that we have here. Be nothing to pull back 500 pips in something like this in one day. So the risk is extremely high. If you have a very large count, very high risk tolerance, then certainly playing this kind of market is by all means the thing to do, because it can really move very quickly. That is it for the week. Please stop by FX Addicts if you are not a member and check us out. We do offer a 7-day free subscription. And also, I am on Mr. Top Step now, so if you've never been there, you might want to check that out as well. There's a chat room there for currency trading, so feel free to stop on by there. You can also sign up there for a trial offer as well. And look forward to seeing you. Thank you. Have a good week.